Hi guys, thank you for joining us again. Welcome back to another session brought to you by Accent Nominees. My name is Tomi Ule, and the topic for today is Fintech in Nigeria, the good, the bad, and the regulation. So as you all know, we spoke about the impact of fintech on SMEs last week, and we discussed a whole lot of things. So this topic is actually to buttress the point which I discussed last week. So we'll be discussing the good of fintech. Of course, we all know what fintech is. So fintech is a financial tech. It is a shorting for financial technology. So the good of fintech, like every other technological advancement, fintech has largely come to our aid to desires of innovators to provide better financial services. You would not deny that the way things are done 10 years ago, the way things were done a decade ago is different from the way transactions are done now, all thanks to fintech, financial technology. So as a result of this, financial services have improved over time. Within Nigeria, fintech has brought about a lot of positive changes that were just a mere dreams over a decade ago, just the way I said earlier. So you can't compare the way transactions are done now and the way transactions are done then. Maybe you want to do a transaction, you want to transfer, but now with the applications, forms and everything, all thanks to fintech. The most obvious changes is the reformation of banking services within the country. Fintech startups have forced traditional banks to innovate their services and these new things with them. So now you don't need to, most times you want to lodge complaint, what we have to do is just call the customer service. You can even chat to them on the application or on our WhatsApp, making banking easy, unlike the traditional times. So things have actually changed, all thanks to fintech companies. In the past, opening an account required for you to visit a bank. For you to visit a bank alongside your proof, that's your passport, you need to sign your NEPA bill. Now you can just open an account on your phone, and then the result is now faster. Just with your phone, just for you to have a password, you can sign online signature. You don't need to show your presence at the bank. Let's not forget the asset going to the bank, going to the financial institution to sign, do this long process. They're very tedious. So but now you can just do that, no collateral, all thanks to fintech. So I feel like fintech has actually done more good, but I'll be talking about the bad. All the ones I've been saying, last week I spoke about the good. Now I'm talking about the good. Now let's go into the bad part of the fintech. So like every other thing, technology is not perfect, and it usually brings its scattered regulations. I'll be talking about the regulations after I talk about the bad. So our startups will make loan easy, quick, accessible to people. So with this feature, it has increased the way people see them. People compare them to banks, saying it is easy to get money from fintech companies, unlike bank where you need to do a lot of process, where you have to go through a lot of procedures just to get, and then the interest rate. Most times people compare the interest rates and then just go for fintech companies. But this has also led to another problem. I'm sure you're wondering how. So imagine borrowing at high rates, borrowing at interest rates that are higher than traditional banks. Some startups, they understand that you need them when you want to borrow money. So meaning that they increase the way they position themselves, they capitalize their position to issue emergency loans by giving out loans at much higher interest rates. In a situation where a person needs money urgently, whether for financial use or family use, knowing fully well that going to the bank is more stressful and tedious, the person has no other choice than to turn to the financial institution, to the fintech companies or startups. So imagine when borrower is unable to make payment of the loan you already took. Most lending startups have sought strategy in the hope of getting back their money, because as I told you, there is no collateral for getting money from these fintech companies. So imagine where you've not paid back, there's no collateral. How do you expect them to get the money back? That is where the bad comes in. So most times they resort to public shaming, which is the cyberbullying, and other forms of public harassment. So in a situation whereby you borrow money and then you are seeing they are spamming you messages, spamming your loved one, saying, do you know so she's owing us so please kindly tell her to. Most times The most common one is the sending messages, like I said, to the borrower's contact list. Some of us, we have some important people. We don't want them to know what's going on in our life. These people will send messages to our contact list, and then unending phone calls to guarantors that don't even know that this contract existed between the both of you. So notifying your guarantor to come and pay. In some cases, social media posts bearing your name, bearing picture, and so forth. So imagine them posting a picture of you with your name, your phone number, your email, everything. So most times they resort to posting obituary, and you are not there just because they want you to come and pay, which is actually one of the bad of the fintech company. Most people prefer going to the bank because you already know that when bank need to get their money, it's either they seize your collateral, sell it, notify you, and the rest. But in fintech, in the case of borrowing from fintech, you already know that there's no collateral. Most people actually borrow with the intention of not paying back, and this is what they know. They know this, that you don't intend to pay back. And how best can they get this money unless they resort to this public shaming, this harassment, this unending call to your loved ones? Sometimes guarantor, they call guarantor and they tell the guarantor, hello, do you know so you took a loan of so from us, and then you are the guarantor. If you don't find him, we are coming to get you. Some of them even go ahead to get thugs just to come and harass you, to scare you, just to make payments. So, and then there's another challenge. One of the challenges is that some of these startups are actually illegal. Yes, I know you will not believe, but some of these fintech startups are actually illegal. So most fintech companies, they are internet companies, meaning that when you come online, you see them, they advertise, borrow money from so cash, borrow money from so money, and you're saying, you go to their Instagram page, it's looking all nice and rosy. They've dropped their link, you are going to their link, you've seen their website, you say, they can't scam you now. They can't scam you. But the sad truth of it is that most of them do not have a physical address in Nigeria, and that's the truth. You see them online, you know them, they are doing this online business, but they do not have physical address. Let me give you an example. There was a time I had money in one of my accounts, not bank account this time around, this fintech company. So most of my savings are always there. So my phone fell down, and then I bought another one. Trying to access the account, they're telling me they don't recognize that device I'm trying to log in. So what would happen to my money? Okay, I was saying, no problem, I have their mail. I was already panicking, I won't lie. So I had to check their website. I saw their mail, sent to them. Could you imagine? I sent to them, was it December 18th? And I was getting a feedback February 8th. Like, imagine. And I needed the money. Do you know how I was able to get the money? I was able to get the money because I repaired the other device. I had to repair the other device. Imagine after you bought a new phone, now you're repairing other device because you could not access your money. They don't have a physical address in Nigeria. So how do you want us to go about this? So this is one of the challenges. Most times they do their business online. They don't have a physical address, which is also very bad. And sometimes this, when I said they were illegal, they don't go through the right process. They don't seek the appropriate license. They just do business. So most times you are trying to go through the right route to maybe sue them. These people are not even registered, no physical address. It's like they are going away with your money. So imagine banking with them, and then one mind is for you to hope that they don't take your money. The other mind is for you to enjoy their services. How bad is that? So that's one of the bad thing about the fintech. Some of them, not all, some of them are actually legit. They go through the right process. Why some do not? Because most of these companies see that it is easy to make money. Of course, I'll borrow money, I get interest. Why don't I go into this business? And then they do that. They don't go through the right process. If you want to establish a business, there are some agencies, some bodies, some regulations you need to comply with, which they don't. Sometimes, even this one I was talking about, I checked the office, they don't have physical address. They are telling me they are in New York, one is in India. So how will I do it? How will I get my money? So now I've spoken about the good, I've spoken about the bad. Now I'm talking about the regulations. Of course, with the technological innovations, the law always plays catch up, and the same is true about fintech in Nigeria. So however, this is not saying that fintech space is completely regulated, and it is like partially regulated and unregulated. So some of the regulations are, or the bodies are, Central Bank of Nigeria. So the CBN is the primary regulator for regulating lending, payment financial services. It is the principal regulator that mandates to issue licenses to banks and other financial institutions. So maybe you are thinking of going to a lending business, payment of financial services, just apply to CBN. They are the ones that regulate these things. They, in fact, even after you do registration, you need to go to the CBN just for them to issue license to you. So if you're a fintech company, you are thinking of offering financial services to Nigerian consumers, what you must do is obtain appropriate licenses and comply with the CBN guidelines. I hope you understood that part. So the second one I have here, though I won't be saying everything, they are limited to what I say. You can go online and research more, but some of these legislation I'm talking about, or the regulation I'm talking about, actually that's the regulations you need to comply with if you want to go into financial technology or online payment services, you understand. So the second on the list is the NDIC, that's the Nigerian Deposit Insurance Commission. So the fintech companies that are in this kind of business, they need to register under the NDIC. That's fintech companies that are in business of obtaining and saving money deposited by consumers. So you need to go through this process pursuant to section 15 of the Nigerian Deposit Insurance Commission. So the third one I have here is the Securities and Exchange Commission. So it regulates that is desirous of raising money from the capital market. You must first register your security with the SEC. So these regulations and the one you'll be checking, they seek to ensure that there's an effective financial system for the settlement of transactions, including the development of electronic payment systems in Nigeria. These regulations also leverage. So what I'm saying is the bodies that actually go ahead to enforce these things. So similar to legislation I stated earlier, there is no single authority that is established to regulate fintech services. That is the sad truth. We have regulations, though they are not necessarily they are scattered. There's no uniform legislation that actually regulates these things. So and then there's no single authority that regulates fintech services. So the body regulating fintech services will depend on the transactions the fintech company is engaging in. So the body that will be regulating this fintech service would actually depend on the service they are rendering. Maybe lending, if it's lending, they go to the CBN. If it's securities, then they go to the Securities and Exchange Commission. Then the CBN, however, CBN is also the primary regulator, like I said earlier. The CBN, however, has the primary regulatory oversight over fintech services and products. It issues licenses and prescribes guidelines that regulate financial institutions. So as I've said earlier, we might be bringing, I'm not sure, but we might be bringing compilation of this next week. But in this session, I already spoke about the good, the bad, the regulations, some of the regulations, not limited to all these regulations I said earlier. The good, of course, we've enjoyed fintech, and what I would say is that we have legit fintech companies we can work with, we can bank with, we can do online transaction with, and then as we are enjoying these online services, we shouldn't forget about the bad. Most times, what we need to do, I would advise before you use an application or work with a startup, check them online. Are they properly licensed? Did they go through some of them on their page? You go there and then you're seeing certificate of the normal license they've gotten from Investment Securities Act, and then most people go through this. They go through these processes, so you check their page if they are actually legit before doing business with them. It wouldn't be nice if you are saving a whole sum or a large sum of money with them, and then they are absconding with your money and you don't know how to reach them, unlike like what I told you happened to me. So because we don't have a particular authority that actually enforce these regulations, so it will be best you are also in it will be best for you to do due diligence so that your transactions will be safe. Thank you for joining us, and I hope next session I'll be bringing you a very more interesting session.